Hello, welcome to first session of this course, Basics of Accounting. Under this very course, I, Dr. Ashima, will help you understand what exactly is the need for accounting, what is accounting, and why should anyone and everyone should have a basic understanding of accounting. Let's begin. Now, in order for any person to understand financial statements such as the balance sheet, the income statement, also known as the profit and loss statement, and the cash flow statement, all three mandatory statements, and another mandatory statement called the changes of equity for an organization in case if they have issued equity shares. These four mandatory statements need to be understood in full if any individual outs to invest in any organization or plans to study the financial curve and background of any organization. Now, the statements which are the balance sheet, profit and loss statement cannot be prepared unless until the accounting basics are clear and cannot be understood if unless until accounting knowledge has been developed by an individual. Hence, let's begin the discussion on the accounting system. The accounting system initiates, kickstarts when any financial business transaction takes place in which there is a transaction pertaining to any kind of cash movement from bank or through any other mode. Now, these financial business transactions are thereafter recorded in the journal as a journal entry. The journal entries are then passed on to the general ledger, in which general ledger hosts all and various types of T accounts which are prepared in accordance to the golden rules of accounting. Now, all the business transactions which have been recorded into the journal pass on to the general ledger. Once a periodic period which starts from 1st April in India of a given year and ends on 31st March of the next year, once this period finishes up, the organization and the accountant of the company needs to prepare the trial balance. They need to close all the general ledger and journal entries for that financial period which has just gone by. Now, when they are closing the financial statements and they are closing the general ledger, there might be a business transaction which they skipped and never posted to the general ledger. In order to find out such transactions which never got its posting in the general ledger, trial balance is prepared. Trial balance helps an individual, an accountant, understand whether or not all the debit entries of a respective transaction are equal to all the corresponding credit entries. Once the balance of all the debits and all the credits is equal, the process of trying the balances to be equal is completed with the help of the concept of trial balance. Now, this trial balance statement is not a public document, yet it is prepared by accountants every year, period by period. Thereafter, once the period is complete, the financial period completes and all the accounting activity culminates itself into the financial statements, which we just discussed are the balance sheet, the profit and loss or income statement, and the cash flow statement. Now, basically, when we are out to understand the accounting functionality, we need to understand the accounting concepts, the accounting principles, as well as the accounting assumptions, accounting constraints. These concepts and principles, constraints, assumptions, and conventions help any accountant in an organization to have a clear understanding with regards to the financial transactions and which transaction need to be posted in which T account in the respective general ledger. which particular transaction needs to be debited and which one needs to be credited, which transaction is going to be posted to a real account or to a nominal account or to a personal account. Now, these three types of accounts are such accounts which are basically a combination of all the various T accounts held in any company's general ledger. Any entry or transaction which takes place between the company's owner, proprietor, in terms of capital repayment, are regarded to be passed on into the general ledger in the respective personal account. Any kind of business transaction which may not be posted into the general ledger but directly from the journal may be taken and posted to the balance sheet or the profit and loss statement. Such transactions may get recorded in general ledger in the form of a nominal account, such as the salaries account. Whenever the salary is paid, the transaction is posted in the journal, yet it may not be passed in the general ledger, and directly it will be attributed as an expense and passed on in the profit and loss or income statement, and yet not recorded as a nominal account in the general ledger. So henceforth, various concepts such as the periodicity concept, wherein every organization needs to follow the concept of periodicity, which is of 1 year in India, which begins from 1st of April and ends on the next year's 31st March, needs to follow such concepts, in which periodicity concepts suggest that the organization is going to prepare the financial statements, start preparing them, have opening balances and close them on the respective year's 31st March. When we talk about the money measurement concept, it simply suggests that every business transaction, if it can be measured in money terms, shall only be recorded in the financial statements as well as the journal as a business transaction. When we talk about the going concern concept, it simply suggests that the organization may be closing their financial statements every year, every period on 31st March in India, but then they are not closing the organization, and on the 1st of April, the organization reopens their accounting transactions and accounting statements and accounting ledgers. Hence, we say that the concern or the organization is considered to go on, and henceforth the going concern concept. So there are n number of concepts which organization as well as the accountants need to follow, be it the realization concept, be it the full disclosure concept, principle, convention, which suggests that organizations need to even disclose any minor financial changes in terms of calculation to their stakeholders as well. Henceforth, maintaining the true and fair view between the stakeholders and the organization in terms of finances. So an accountant needs to follow these concepts, these principles and conventions and assumptions and constraints in order to make sure that the financial statements are robust and maintain the true and fair perspective between the stakeholders and the company. Accounting is carried on by the accountant as an aspect of controlling the flow of money into the organization as well as out, ensuring there is a full control of assets. There is a planning involved with respect to future transactions in terms of expenses as well as income. Accounting is in compliance with the law in terms of full disclosure concept. Accounting follows the golden rules of accounting, and hence there is a systematic recording which takes place with respect to all financial transactions undertaken by any organization, as well as accounting helps an organization maintain a financial trueness and fairness with their stakeholders, including the customers, the investors, potential investors, competitors, creditors, lenders, and government and public at large. Accounting assumptions include that organization as well as the owner promoter are considered to be separate from each other, and every transaction taking place at a personal level by the owner of the company shall not be construed as an organizational transaction, and henceforth. I explained the going concern concept as well as assumption and the time period of periodicity concept. Historical cost principle suggests that every organization needs to record the asset at the cost which it bought it for the first time. Matching concept or principle also suggests that every debit entry is supposed to have a corresponding and equal credit entry in order to make sure that the double entry system is complete. Any financial transaction which is of material aspect shall be considered to be passed on in the journal as well as general ledger. Henceforth, in this very session and video lecture, I come to the end of helping you understand the basic nuance of accounting, helping you understand the entire cycle and process of accounting activity, which begins from recording a financial transaction ending up in preparing financial statements. I also made you understand various concepts, assumptions and conventions in this video lecture. Hope to see you in the next lecture. Take care. Good day.